Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update for this important Thursday, and this is the 9th of March, 2017, getting on just after 2:10 p.m. Central Standard Time. You know, I want to jump for joy just like this. I have been talking that I thought gold could slip back towards 1,200. I was on TV recently and really stuck my neck out on Bloomberg the other morning. I had the producer write me, said, boy, you do stick that neck out. Here you are as the market is coming down to it. And I'm also going to stick my neck out and say I think we're getting fairly close here with the blow-off in the crude to the downside today. I was waiting to see what would happen if they got the market under $50. They took the market down for a hard hit, and late in the day it's starting to get its legs under it. Doesn't mean it's going to rebound here. Doesn't mean that you're suddenly going into a bull market. Just acts funny. The other thing that went on today, you fell back to the all-important 18-day average of closes in a number of the stock indices right in front of tomorrow, and it's going to affect the metals, the all-important jobs data. But when I say it's going to affect the metals, the market is fully built in a good jobs data number, and it's built in a March rate hike. So I think we have two events that are going to end up being, from my point of view, non-events. When we come to the gold, on the weekly chart, today you got down to 1201.20, which hit the 100-day average of closes. Remember, I've been showing you this. The 100 is in the green, that's the 100-week average, and the 18-week average at 1194.30. In other words, I was looking for a challenge back on that 100-day average for the market, if you will, to try to figure out what's it going to do next, and that's exactly where we're at. When you go to a closing basis, we've now had a 60-some-odd correction as we've come from 1264.90 to today's break low close of 1203.20. When we look at gold, it has certainly leaked its way down, and this is the next support zone, this break right through here. So I'm looking between here, let's call it the low 1180s, to right on the doorway here of the 1201 level is the beginning of an area that'll be a bit harder to get through. Now, when you add the swing line to the chart, and this is the same chart without it, you get a clearer picture of lower highs and lower lows. So you see the downtrend. The second thing you look at is where are the key moving averages. You're under both the 18-day average in the red and the 100-day. When you're under those, there's only one other number that I look at to see where is the market in relation to theoretical support or resistance, because this is certainly not acting as support zone. On the way up, they could be a resistance, and that's the lower Bollinger Bands. And what this market is trying to do is called ride the Bollinger Bands lower. But there's a negative to it. The negative is, will the market stay under the 100-day average after being over it since February, or was this part of the news just a blip in the market from a market that had been under that 100-day average for a very long period of time? That's what's going to get asked. In terms of momentum, you are plain oversold. You're not even close to turning this into that embedded trade. And in talking about that, I want to remind you, at the end of this, I'm going to talk about my school. You get a discount on it. No, my school, people ask, well, how much is it? $500, whatever. It isn't. We're talking with the coupon I'm going to give you, it's $75, and you can learn how to do all this yourself. No handling, no delivery fees. You're going to get my advisories and so on. So I want to throw that out at you because it is a special on it, and I don't throw these specials too often. Did one at Christmas, I'm doing one now, and that might be it for a bit. So in looking at this, lower highs, lower lows riding. If you rally, look for 1216.50 to be the first resistance, 1234.60. Down here, the way you are, for no reason at all, you can get a short covering rally. It's that simple. Same play in the gold ETF. Lower highs, lower lows. First challenge is again under the 100-day average of closes and very oversold and can't embed. Now, this is the market that has had the embedded reading all the way down, and it's suddenly pulling away from that number. You'll get an idea this market is too cheap, or the marketplace thinks it's too cheap. It has nothing to do with me. If you can get back to 2266. Here's the negative, though, on it. If you get the 18 under the 100 and price or under both, could be another leg to the downside coming. I feel great when I switched gears on you and said we've gone into an upthrust in the gold-silver ratio. And boy, did that come alive. Look at how it's come back up here. I don't know where it'll end. I don't care. I care that we called it right, that gold was going to be stronger than silver, and that's exactly what you can see here, is silver is well under the lower Bollinger Band. But there's a theme in all the metals. All of the metals are not even remotely close to getting an embedded reading. They're just plain very oversold, and oversold either leads to you embed or you get a correction in the market. In the silver ETF, the same thing as the futures. First big move under the 100-day average and oversold in the process. So yeah, we've got downtrends all through these. And copper, well, can it get to that 100-day average? In between these two is where I'm looking for the market to try to, if you will, establish, not a bottom, but figure out, is it getting too cheap? You could embed. Now, if we add this together, notice here, both numbers are under 20. So day one, yesterday, tomorrow will determine if they're going to embed or not. So generally they don't, so I'm expecting a small bounce in the market. In the platinum market, oversold. Now we've got 2 days in a row under the lower Bollinger Band. Typically you don't go more than 5, all right? And if you add a percentage point as each day counts as 1 point, remember I'm doing this typical, I've seen 7, but the rule of thumb that I use means a 3% chance of staying under that number. When I look at the palladium market, it finally collapsed, lower highs, lower lows. But how do you sell into the lower Bollinger Band? That was the problem. And it's oversold. I don't know. Is it going to break out of this sideways action and stay out of it? That could be what it does. You'll have a real good idea, obviously, if it went down from here another $20, but we'll see. So far, each time it's done this, like it did here, it popped back up. So we'll see what that does. As for the dollar index, wouldn't you think the dollar would be a lot stronger going into jobs data that seems to be a given? It's going to come in as a strong number near 200,000 and the Fed's going to raise interest rates, but instead it refuses to embed. It's stuck at the upper Bollinger Band, and suddenly we're getting what's called an outside day down. If the market has follow through, maybe it goes another 50 lower towards the 18-day average. If it doesn't, we've got to get these numbers picking up over 80 to embed. Otherwise, we're sort of stuck in limbo land, not a lot happening. As I told you about my course, let me tell you what I do. Every couple of years, I redo this course from beginning to end. This time I did the course so that it's a completely online course of 54 videos. I teach you everything that I think is important in understanding a chart using 5 different indicators. And on those indicators, it's the moving averages, the swing lines, the Bollinger Bands. You're going to learn how to work with slow stochastics. I'll give you tricks on other ones, the moving averages and outside days, inside days, what I think they all mean. 54 chapters of it. Then you get charting software, so you see what I do, you do the same thing on the chart. And then in the mornings, you follow me on a live, well, for me it's live. I record a new video every morning. In that video, I walk you through the swing lines. I'm going to walk you and explain to you what we're seeing on the moving averages. And there's more moving averages than you see when I do these videos. I really go into analysis on slow stochastics, and I try to get you to master it as well as the Bollinger Bands. You get $90, well, roughly $100 in charting software, $60 in my 30-day research, and the whole course to use, right? All for $74.95 if you use the code IRA15. That's IRA15. How do you get to all this? Well, you can either go to our website, and under the word education, you're going to see the futures course. And we have a video, and we explain all the facts as to how it works there. You can click up here if you're watching me on YouTube right now. And other than that, if you go on the bottom, you can ask for more information if you're on other websites. But the best thing is to go watch the videos I've got on our website and learn. This is an opportunity. I don't discount this course that often, so you've got another opportunity with it. Why not take advantage and get the research that normally runs you $60 for $14.94 or more, $14.95. You get the charting software, you get the research, and of course the course. I'm Ira. You have yourself a great day. Hope you take advantage.